All right, Bulls and Bears, back with another financial slash economic update. Today is September 3rd, 2024. We got a lot to get into as usual. I'm going to quote the market price today. I don't usually quote uh, prices or indices live because by the time you watch it, things may have changed. As I'm recording this, though, about 1 hour before closing today on Tuesday, September 3rd, the Dow Jones down 587 points. We've got the NASDAQ down even bigger, down over 3% than the NASDAQ. S&P 500 down nearly 2%. Russell 2000 also down 3%. Plunge in oil prices nearly 3.8%, down to about $70.69. Gold is down by about 1/4%. Silver is down by over 2%. 10-year bond yields pushed down again. Who's buying all the debt? Remember, when yields drop, that means somebody's buying the debt, because in order to entice buyers, yields need to be higher. So when there's no buyers, yields have to rise on these bonds, on this debt, basically. So we know there's a big buyer out there. Could it be, let me guess, the central bank maybe? The Fed? No, they wouldn't buy this. Folks, they're buying everything under the sun. And I don't even believe the charts anymore. I mean, we still have to look at the charts to show trends, but I don't even believe the charts anymore. I don't believe most of the economic numbers that are put out. It's still good to look at them because even wrong numbers, when you compare other wrong numbers from previous years, can show you a trend. So even though they're off, if you're looking at the wrong number versus the wrong number, it still can show a trend. Anyway, Bitcoin down to just under 58,000 now. Folks, we got a lot to get into. Let's go ahead and get started with this here. U.S. jobs data returned to center stage as Fed mulls rate cuts. That's how it was put out there in Bloomberg. Unemployment report has ousted inflation as biggest market mover. So if inflation was the biggest market mover, why are markets going up? Because inflation is still a big problem, right? We talk about it here all the time. Inflation slowing or going up slower than what it was previously is not helping anybody. It's less worse than what it was. Instead of breaking two fingers, you only broke one finger playing basketball or pick your sport. So it's less worse, yes, but is it getting better? No. Most people are still getting further into debt. We're talking close to 70% of the population still skating further and further into debt. They're just finding new ways to manage this debt through balanced transfers, early retirement account withdrawals, a lot of rescue programs happening right now, thousands across the country, down payment assistance programs that were put out there in 2020 as a temporary help because people needed help because of the health crisis and the great sickness, all that. Well, instead of dwindling down those programs, they're actually more. They're coming out with more. We have more down payment assistance programs for homes in Oregon, in California, even if you're a non-citizen, right? So they're finding more ways to keep these markets propped up. Of course, down payment assistance for homes keeps this housing bubble inflated. And I said right here, they can come out with many new ways to kick the can down the road to keep the bubble inflated, but it doesn't mean things are not changing. There's things that are changing. And I get accused of saying the same thing all the time and nothing ever changes. Folks, things are changing. The debt's gotten worse. The number of rescue programs have gotten worse. Right? Most people are worse off today than they were just a few years ago. Just look at the debt levels, right? That continues to get worse. So things are changing, but it's not like a market crash where everybody would know when the markets drop 50% overnight. Of course, everybody knows that. But these are changes that are playing out over many, many years. But every time we look at even the month-over-month numbers, things continue to get worse. Inflation continues to get worse, right? We were told just the opposite. We were told we were coming out of the woods, that inflation was tamed or transitory. But we know with everything happening right now, inflation's only likely to continue to get worse, right? You can't keep the bubbles propped up and expect things to get easier for people, right? Homes are out of reach for most people, and they're going to get further out of reach if these things continue. So what we need is a big rug pull, a big plug pull of the entire system. Will that come in the form of a black swan? That's what I think is going to happen. It's very likely. There's lots and lots and lots of risks out there right now. We've got the risk of war escalating. We've got the risk of more hacks and attacks against our system. We could see an outage. We've already seen many this year, including the biggest hack of all time, where they said pretty much everybody's social security numbers were taken and got put into the wrong hands. Right. So these things are just going to escalate, continue. What else do we have? We have a lot of news that's likely to come out in the next few months, in the next few weeks. It could be any time. I wouldn't be surprised if it came out Wednesday. And these are things that are going to, I think, shock most people, shock the markets. When you see what some of our leaders have been up to and some of the bankers have been up to, some of the businesses, corporations have been up to, I think you will be shocked. In fact, I believe that we have businesses out there right now, big business. We're talking the Blackstones, the BlackRocks, the Invitation Home Loans, the big investors. I believe they are colluding together to keep home prices elevated. And of course, they're buying up these homes in the name of business, in the name of they're just doing business. They're making profits. Well, I think it goes beyond that. Take a look at what's happening in Florida. Florida lawmakers stay quiet as corporations buy thousands of homes. Regulations for corporate landlords are few and far between in the Sunshine State. So everybody knows we saw home prices spike in Florida over the past few years. And corporations, they have access to billions of dollars in liquidity at the click of a mouse. So is it fair that they can come in and buy basically as many homes as they want? Is that fair? This is borrowed money. So whoever can borrow the most money and buy the most homes can go ahead and just raise the prices, and they're the winners, right? So in this case, how do you compete as a person, as an individual, against these big, in many cases, multinational companies? It's very difficult. Many people priced out of the housing market, and that's just one of the reasons. Many other reasons. But you notice it says, the article says, Florida lawmakers stay quiet. Why do you think they're staying quiet? Have you noticed all the lawmakers actually get rich when they take their office or when they accept their position, when they get into power? They get rich. Do they magically become great investors, or are they getting paid by the same companies that are knowing or probably telling them to let them keep on doing this, to let us keep buying homes, don't pass any laws? And of course, the lawmakers end up getting really rich, don't they? I think most of you know how this works, folks. And if we continue to pay attention, look at the numbers, look at the data that comes out each month, we see more signs of a slowdown. And it's always another piece of evidence that comes out here. U.S. manufacturing mired in weakness as construction spending falls. So the lack of demand is now coming back into the job market. You're likely going to see layoffs accelerate. The unemployment rate has ticked up. And what are we at now? We're at about 4.3% as of July. That got updated August 2nd. So we should see the August numbers coming out any day. We'll be right on top of that for you. But speaking of the unemployment number, you know, I love looking at charts. I think you do too. Let's go ahead and bring up a chart here on the unemployment rate. And let's go back all the way to the early 90s, about 24 years here. And what do we see before each recession? We see the recessions in the shaded area. And what do we see before each recession? We see an uptick in unemployment. So it's ever so gradual. But let's go back to the year 2000. We had 3.9%, 4.2%, 4.2%. And right about when it hit 4.3%, that's when the recession was declared. Of course, they declared it after that and then went back and they revised it. But we could see the uptick again before the 2008 financial crisis. Back then, it spiked up even more quickly. It went from, one reading in November to 4.7 up to 5% in January 2008. And we know that even throughout the year 2008, if you watch the business news, they were questioning, are we in a downturn? Is there a recession? Is there not? But yet later in the year, we know there was. So then they went back and they said, oh, by the way, it started back in January. But you can see the same thing, uptick in unemployment before the recession kicked in. Now, 2020 was different because that happened so suddenly. In that case, unemployment was actually dropping, I believe here. Let me just check here. 3.6, December 2019, 3.6, January 3.6, February 3.5, then March, all you know what broke loose. And that was an exception to the rule where we usually see unemployment tick up. It was actually ticking down going into March, where global health crisis, all that stuff. What are we seeing now here? Let's go back to March 2023. We're at one of the lowest in many years, 3.4%, actually January 2023. Now we're up. March of this year was 3.8%. Now we're up to 4.3%. So pretty big rise from a historic standpoint. And do we think it's not going to happen this time where there's going to be a recession? Or will it be like 2020 where they just throw so much money out into the economy, stimulus checks, loan forgiveness, cancellations of rents, cancellations of mortgages. People didn't have to make their payments. People didn't have to make their utility bills payments in 2020, right? All the things that were put out there to help people. Then we had to ask the question, okay, why do people need all this help? Because before this, they were telling us the economy was strong, the consumer's strong. But yet they needed all this help just after one or two missed paychecks. So that underpinned the fact that most people are living paycheck to paycheck. And it wasn't just the middle class, it was six-figure plus income earners that were begging for forgiveness, begging for loan pauses, begging for help, right? So even the six-figure people, what do? They take out bigger loans. They get into more debt sometimes. Just because they make more doesn't mean they have more savings. Many do. The top 10%, if you look at the top 10%, they have the most savings and they own most of the stocks. So we're going to see in the very near future either a big rescue program. We're already talking about student loan forgiveness on a massive scale. And that could be the tip of the iceberg. What kind of other rescue programs are going to come out there, assistance programs, to prevent the economic downturn from happening? And again, it always happens when unemployment ticks up. If you look back almost, 25 years, we looked at the chart, right? So let's move on to some other stuff there. Please let me know what you think about that down in comments. Sorry, grab a drink of water real quick. On to de-dollarization and BRICS nation news. Russia invites Mongolia. I just drove it down a street called Magnolia earlier, so my tongue twister there. Mongolia invites Mongolia to the BRICS summit. We know what happened recently with the U.S. Seizing the plane of the Venezuelan president. Folks, we've thrown our weight around the world with all these sanctions, thousands of sanctions. I'd have to look it up. Thousands of sanctions. And it's no wonder why these countries want to get away from the U.S. dollar. And they want to trade outside the dollar. They want to trade one in their own currency, but also they see what we've done to our dollar, how we've just tried to mask over all the economic hardships by creating more dollars. So they're actually looking at gold and even silver. Gold and silver as integration into their trading and their system of money. So it's going to get very interesting. We've got a big meeting coming up in October, and we're going to see what happens there. Will it be something that's said that shocks the markets? Will it be something that's done? Will there be a big sell-off of U.S. dollars and dollar-denominated debt? And will that cause interest rates to spike and cause a severe economic downturn, right? We'll have to see how it plays out. But I would be very, very cautious for the black swans, for the BRICS nations announcements and actions out of the BRICS nations in the next few weeks. I'm talking very, very soon. I see big red flags and big risks right around the corner, actually. Fearing layoffs. More workers are career cushioning. A number of factors may have workers feeling like they need to prepare for the worst. Why would people be preparing if the consumer is resilient? Remember, we're told the consumer's strong, the consumer's resilient. Hiring has slowed, adding fewer jobs than expected. Meanwhile, some major companies, especially in the tech industry, have high-profile workforce reductions. All these factors are contributing to workers feeling like they need to prepare for the worst. We were just told last month that consumer confidence ticked up, but now we get these reports where people are preparing for the worst. Quote, I first was like in shock and then all of a sudden just had a full mental breakdown, unquote. This is a woman announcing that she just got laid off here. She was a data analyst with Tesla. We knew this was going to happen with the electric vehicle slow down. She continues, quote, I was like, oh my goodness, I'm like, really out of a job? End quote. Career cushioning is when an employer perceives that the organization might be going through some kind of economic turmoil and that layoffs might be coming down the line. So what do? They start looking for jobs, more stable jobs, but even the job they get, will it be stable? if things continue to go on like they're going on right now. Yes, they can mask this with down payment assistance, but what about people's everyday bills? How much longer until the credit card payments are just too much to sustain? Well, we see 1 in 5 people close to that now being maxed out on credit cards. And what's going to be the next shoe to drop? Will it be the black swan? Will it be the consumer spiking bankruptcies, spiking delinquencies? I mean, they're already starting to spike, but will we see a parabolic move upward? By the way, speaking of parabolic moves, I'm out of my stocks that I was betting against. For those of you that kind of follow what I trade here, we did really good on NVIDIA and Rivian. I'm out of both of those trades. I actually bet against those stocks, meaning bet that they were going to go down, and they went down. They both went down. So I closed out my trades, got a win on both of those. So that was a good trade. It was good to see. But anytime you see a spiking parabolic stock, what I do is I look for these patterns. And right now, I'm being very cautious on going on the long end, even though markets are making new highs, with the exception of today, by the way. Markets are still down over 500. Dow Jones still down over 500 as I'm recording this. We're now past 12 noon. So we'll see how the market closes out. A lot of times at the end of the day, we get a big mystery buyer. And again, I think we all know who it is, comes in and buys massive amounts of stock right before market close. Look at this here. A Save-A-Lot store, is a grocery store, closed down in a town where there's not many other stores around. And they interviewed people, and this was over in New York, I guess upper New York, upstate New York. And these people were concerned about having to drive further to get to a new grocery store now that there's little Save-A-Lot stores closing down. So we have people so stressed out financially, so pinched financially, that they're concerned about driving a few extra miles to a different grocery store because of the cost of gas. And also they're afraid that they won't get the prices that they saw at this Save-A-Lot food store. We see dollar stores closing down. The 99-cent store closed down. And you would think that would be the place that gets the most business, right, with this economic situation right now with inflation. But they had to deal with theft, which is another symptom of a deteriorating economy, and people buried under too much debt and the cost of living being too high, right? So there's a lot of different things to look at, but it's causing stores to shut down. So you have less spending power from the consumer. And folks, one of the keys to this, I'd say the key, the biggest factor, is the banks. The banks have been given a green light to loan out money regardless of how much they actually have in deposits. And we know the deposits have been dwindling with the savings rate. So we've got low savings, dwindling savings, but yet the banks still allowing people to go further and further and further into debt. Just the opposite of what should happen. Normally, when bank accounts are being drained or dwindling, banks would tighten up lending because that's less money that they have to loan out. Now they don't actually have to have the money to loan out. And it's even happening in Canada. Look at what's happening up in Canada here. Canadian debt hits record high as insolvencies rise. So insolvencies rising and debt rising, that's not supposed to happen. Debt's supposed to decrease because banks are supposed to tighten the lending when insolvencies rise, when late loan payments come in. Banks typically, in a real world where you had sound money, real money, banks would be concerned about that. But when you can just create the money out of thin air, get a bailout, get a liquidity injection, click of a mouse, banks continue to loan out money. So what do I say? Why do I say we have to have a disruption, a rug pull? We have to have the banking system somehow get compromised or interrupted and stop this debt issuance in order for the economy to really see a major contraction where people will really notice it, where you see a massive drop off in the economy, spiking unemployment, spiking insolvencies, car repossessions, foreclosures. It all goes back to the banks, folks. But the reason I wanted to bring this article up about Canada is because people think that it's a leadership problem here in the United States, meaning that this November everything's going to change if we get the right person in office. Folks, it's not going to change. Maybe a little bit here and there, but structurally, not enough changes are going to be made to change this entire system of a debt-driven economy, right? I think most of you understand this by now because I try to come back to that because that's one of the most, I think, confusing points out there is how can the economy be doing bad when everything else is going up in price, right? It's manipulated, it's borrowed money, it's corporations buying things. A couple more things to get into, and we're going to wrap this one up here. Business Insider here. Millions of student loan borrowers are losing a key debt relief program in 30 days. Remember, the students had to begin repaying their student loans about a year ago, back in October 2023, and they were slowly integrated back into repayments. In fact, they gradually increased their monthly amount up to where it should be. It started off at a fraction of their normal payment. But now that's going to be ending in 30 days. So will that be another ingredient in what I think is going to be what many are calling a red October, where you see everything fall apart in October? We've seen it in years past. October is a critical month for the economy. With the announcements that are going to come out, be very, very cautious, everybody. Make sure you're subscribed. Keep stacking. Make sure you have your silver. Make sure you have some real money in case this thing spikes out of control. But be ready for a deflationary situation, a shock, a surprise, so to speak. Either way, be ready for it all, folks. Keep stacking. Big love. Bye for now. Peace.